Well, hello everybody. Welcome to the midweek update. Joe with you here. It's the 16th of July, another Wednesday. Let's take a look at what the markets are doing. You guys know how this works. You're going to be sharing trades with us. We'll be taking a look at it. I'll give you my opinion and just make sure that you take responsibility for whatever you've decided to follow.
All trades and analysis in this video are for professional traders only. This video has been released to the public after a delay required by our compliance department. Maverick Traders received this market recap immediately, along with real-time trading support and resources. Maverick Trading is a proprietary trading firm that backs professional stock and options traders with firm capital. Our traders keep 70 to 80% of the profits they generate. If you're ready to become a professional trader, click the apply link in the video description below. Let's break down what happened in the markets today.
Let's get into our current outlook. We're kind of pumping the brakes here. A little bit of a high base consolidation thing going on in the markets. It's been super strong, testing highs on the Nasdaq, the Qs, but a little bit of a hiccup yesterday. We did have a pretty decent little bearish candle. I've been waiting for some sort of a pullback or the bears to actually test it. So this is going to be kind of a fun day, folks, because we do kind of have that. So overall, we're going to keep that -1 outlook. I would go 0, but the candle's a little bit ominous, and today's move a little bit lower than that kind of confirms we might see some weakness over the next day or so, but we're still within that consolidation range. So monthly outlook is still a +3. Things are very strong. We are into earnings season. We did get a round of bank numbers that weren't too bad. Citigroup did pretty well. A couple of them were in line with expectations. So we got that. Today, we got Johnson & Johnson that came out, I think it was this morning or last night. Anyways, they beat numbers and they're up quite a bit, carrying the majority of the healthcare sector up. We'll see that here in a second. Economic-wise, we did get a higher CPI. We did expect that to be higher, so inflation is still kind of out there. I think that's kind of what started yesterday's move to the downside. However, today's PPI was absolutely 0. It was flat, showing a little bit of a disconnect between what the consumer is dealing with or forced with when it comes to worries on some of these tariffs, because they are at the end. But when it comes to the production side, those raw materials really have not changed. In fact, they were flat, less than expected. So there's a disconnect there. Once again, these numbers are delayed. Some are, it comes from 3 or 4 different sources. But when you see that the production price really hasn't increased, in fact, it's flattened. But on the consumer side, you've got an increase for expectation. But when you get a disconnect like that, you're going to get all sorts of questions. But more importantly, you're going to get volatility. So let's see where we go. Economic reports, we have the retail sales coming up. I'm really going to look at that. I want to see how active the consumer has been. Unemployment claims, to see if any of that has continued. Understand, unemployment claims were a lot lower than expected last time, 2-month low. Worried about some of the federal layoffs and some of the impact it might have when it comes to claims. We haven't seen it yet. I'm not saying it hasn't happened or whatnot, but we haven't seen it yet. And then the Philly Fed manufacturing. Let's see where we're going there. So we do have some things that could be pretty interesting looking forward. All right. With that being said, let's take a look at our markets. You could see that we did have a kind of a slide to the downside. The markets opened pretty much flat and have been rolling over. As of the last little bit, when we started this class, it's been kind of interesting to see. It's dropped a bit, now it's bounced back up. So there's a lot of pushing and pulling going on. You guys have probably seen headlines out there. I want to see conviction in the sentiment. I know that there's worries and fears and that and this, so it becomes very emotional and very political for a lot of people. But price action is what we need to follow here. So until we get confirmation in that direction, we have to assume that that sentiment is going to stay bullish and maybe buy into some of this move. We could still be pretty defensive, meaning we do not have to be active. This is a great time to pump the brakes and just let your trades that you have kind of marinate. Let them sit there. Take a step back and see what sentiment indeed does with the news that we're seeing. So let's just go to this heat map here. A couple things to look at. Healthcare is one of the stronger sectors. Eli Lilly's been a pretty weak stock as of late. One of our sideways trades that we do like, but it's having a bounce. Johnson & Johnson just beat their numbers. Now, these two alone is enough to move a lot of this sector higher, but there's a lot of participation going on because of some of the things that the healthcare sector is seeing. So when we get to other things like Tesla, that's just a bounce. Google's a pullback. Meta's a pullback. Nvidia is a pullback. Here's an easier way to look at it, folks. This is what I really like to do. If you just go back to, let's go to the groups here. And if I scroll all the way down to basically just 3 months here, what's leading? Technology, communication services. Tell me something I don't know. Okay. Consumer cyclical. But what's weak? Healthcare, real estate, consumer defensive. Okay. Well, let's just go all the way to today. What's the biggest move today? Healthcare, which is one of the weakest of the last quarter. Real estate, communication services is still hanging in there. One thing that's interesting about that, it never really gets weak, does it? Here's 1 week performance. Here's 1 month performance. Communication services still hangs in there. But when you see flip-flops, technology, a little bit weaker today. Healthcare is bouncing. Real estate is bouncing. Consumer defensive is bouncing. Look at consumer defensive a week ago and then a month ago. So we know that when I see things that are weak become strong and things that are strong become weak, it's an absolute corrective action or pullback. So how do we trade these? You don't. You have to sit through them. We talked about this on yesterday's end of day. Rob made a very good point. We do see a little bit of weakness coming in. Let's just jump straight into that chart. But it's not a panic sell-off. It's just weakness. So let me zoom in on this and corrective action. Now this is a real bummer, and I've got some trades out there too. If this is going to last a few days, I've got some trades that expire this week as well. Right? I've only got 3 days here. Chances are it might kind of bottom out and then start to turn, and some of those bulls that I had might not pan out. However, it's not the time to where I'm going to just dump all of my bulls and go completely bearish. In fact, taking a look at the candle that we have here, it might be a little bit more resilient than we think. It's very difficult to react to news. It's very difficult to react to emotions and some numbers out there, especially when you see a big candle like we had yesterday. Believe in the sentiment. So let's just pump the brakes here and chart. So where are we at? Well, check it out. We've got a little hammer candle forming so far. Now that can change. We'll see. But that's a pretty good support level. We're still in a very, very strong pattern. This is an incredibly strong high base after a really nice move to the upside, breaking into new highs. This is just the SPY. Now the Dow itself, let's take a look at the diamonds, is probably, it shows a little weakness, but once again, not enough conviction in there for me to just go straight bearish. It had the same kind of a decent surge. It's up at some resistance levels. It did test its highs. It is pulling back. We've got that hammer going, but look at the moving averages sloped correctly. We just have a 50-20 crossover happen. So it's still a high base. It's still a +1 at least. 0 right now in the channel that it has. So let's just go to the Qs. And this one's just super, super obvious. There's still purchasing going on in the FANGs. There's still purchasing going on in the Darlings, or whatever you want to call them. There's still purchasing going into AI. It's going in a little slower. But these charts are still slowly accruing capital. When you get a hiccup, it does create opportunity to get in some of those bullish trades. You've got to wait for the correction to finish. This becomes a little bit difficult because we are in earnings season. And I've got a list. I've got some positions. We've been looking at this for weeks and weeks and weeks. What's holding in there? The bear side, they all look great. All of our bears, we look like champions, by the way. Great work out there. But on the bull side, what's not pulling back? What's consolidating? What's hanging in there? And that's kind of where I want to go for today. So the first off is some of our sideways stuff. Let's take a look at this. This is GLD. This is gold. It was put on as a sideways trade, or I should say it was suggested as a sideways trade, and it is continuing to stay that way. Now you'd assume that gold would continue a little higher when it comes to a little bit of weakness in the markets, right? We know the dollar has been weak, but when we see a CPI number that's so hot, and then we see a PPI that is cold, it kind of makes things a little bit more difficult to gauge on where the markets are going to go. But gold itself, a little bit of a reaction earlier today, and it's kind of come right back down. It's still within a pretty good range here. We might get that push and pull. Once again, folks, I mean, I like the pattern that I'm seeing in the SPY, the gap up and the trade down. And so it'd be nice to see 1 or 2 days down, or at least some sideways, more corrective action to kind of bring things together till we could put some more money to work to the bull side. If that happens, I think gold's going to stick probably around this area. Oh, sorry, folks. Let me do a better box here. I want to open it up a little wider. There we go. But for now, I mean, things are looking really, really, really good. It's a nice trade. Still looks good. If it expires this week between these boxes, you've got 3 days on this. It looks good. I still think it looks decent moving forward, depending on where these markets go into the end of the week. And I do believe it's an option expiration, right? Yeah, it's a monthly expiration coming up on Friday. The next sideways that was brought up to our class was toast, and I typed it in wrong last week, T-O-A-S-T, like the toast you eat, and I got the ticker right this time. Here it is. Nice pattern, still holding sideways. We talked about the range after the gap. I tightened it up after some of these points, right around that, what do you want to call that, 4150, 41, yeah, probably 4150 area. After that gap, it just kind of pushed higher. But look at this range that it's got. Now, it is floating a little bit more towards that 44, maybe 44 area on that 20-day moving average. But if it can stay where it's at, it's a decent trade. It still looks really good to this point. So great work. Now, this is one that I brought to class last week. This is Walmart, a trade I am in. I figured, hey, I'm going to start taking some of these trades here. I've got the 94.92, 98.100 iron condor on this that expires in a few days. So I'm still comfortable with it. I've seen it threaten a little bit more, but I'm not too worried about it. It's still within this range. I'm tighter than that. You can see I drew that on 100, but I'm more around the 98, which would, I'd say right about there, and then the 94, which is just below this. Let's move over to some of the bears that we had from last week. And folks, I kept every single one of them, and I added one just for fun because I really want you guys to follow along with these. This is BRBR. This is a bear trade setup, a descending triangle pattern that confirmed. It's still going, right? It broke down here, kind of a credit. It credit to down, so a -1 kind of a trade, a bleed off. I think we had kind of a 56 area that we could target it. It's kind of on its way to date. Yesterday looked really good because it confirmed the move to the downside. Now, guys, if you believe that the markets are going to have the next few days down, this just absolutely has confirmed kind of a, almost, I should say, if you want to get below this, it's pretty much confirmed a bear move to the, a bear move, so it could be entered today. Just be very cautious. I want to make sure that this closes below that 56. But if you entered it last week, you're probably sitting on a pretty decent little profit right now. But it still looks good momentum-wise, and all of these will. This is CAG. Conagra Bands has been back and forth on this class for some time. I knew that it had its earnings. However, it just has continued. It broke. It's starting to bleed lower. If you think it's a little bit overextended, you could just wait for a little bit of a corrective action there. But it's continuing nicely to the downside. Campbell Soup, more of a sideways to down, kind of a -1 trade, more so than anything more aggressive. But it's been playing that. If you can survive these little corrective moves, playing a 1-to-1 risk reward, playing a credit, things like that, and just kind of let them play themselves out and get to that expiration cycle, all of these have probably been pretty easy to do. It's just the management part of it. Here's PG. This was one also brought up on this class. And look at this beautiful roll to the downside. So breakdown continues to slide. I'm not sure what its next earnings are. Here we go. It's got earnings coming up on the 29th. So this could be a quick in and out probably for next week if you wanted to make a trade on that. A little extended here, considering that some of these others are bouncing, but this isn't really participating. So I like it, but if you're feeling like you're chasing it, that's okay. See if it can correct or pull back. Here's Costco. This is one that we brought up, I believe, last week as well. It didn't quite confirm what I was looking for. In fact, I had it on my watch list, and I was trying to get into it, and I couldn't because it didn't confirm. But guess what, folks? It's doing it now. So good confirmation to the downside, breaking below the 200-day moving average. We've got some targets here to look at. Down back in this area around the 930. That's pretty low. We could go further if you want to go to 910. I imagine just like any descending triangle or ascending triangle, once these break, they might have a tendency to correct a little bit and then roll back down. So you might want to give it a little bit more time. Now that being said, let's go ahead and take a look at if it's got earnings coming up. I can't see it on the chart, but be mindful that it will have earnings coming up. So just make sure you triple check on that. Let's do two more. This is PSA. This is another one brought up by this class. Public storage. Look at this nice bleed below support levels. Diagonal spread, credit spread. It's just working out really, really nice. So good job. This does have its earnings here on the 30th. So you've got a few days on this. What about 2 weeks? About a week and a half, 2 weeks, somewhere around there. Now, let's get into one that I found today, similar to those lines. I like Lulu. I thought Lulu was kind of a neat move. It's in a very weak sector, right? Consumer cyclical has been weak. It's been getting beaten down. Look at that rollover. I like it. Now today, it's up $3.60 or over 1.5%, but it's just this anemic oversold bounce. So I'm okay with this. I'm okay letting it, giving it a little bit more time. Let's see what it can do over the next few days. But if it starts to threaten that 220, I'm looking to probably do something like a -1 trade on it. Probably vertical or you know me, probably a targeted butterfly for the next 2 weeks, a week and a half, something like that. So that's where we sit. That's where I sit. When you get to these live classes, they're live. There's good days, there's bad days. This is the day that is more of a corrective day, more of a corrective action, more of a move to the downside on a very strong market. So all I do is kind of build a list to prepare more so than enter trades as they trigger. So be mindful of that. Also, don't overreact and don't panic when it comes to some of the trades that you have on that, oh, geez, I'm worried because they're getting burned right now. A lot can change in a day. So what do we got here? Oh, Dave's got a trade for us. Let's take a look at Oracle. Is this thing still extended? To the upside, I imagine, right, Dave? No, it's not. It's not. I like the gap down. It's more of a consolidation. These are fun trades to play because you can play something within these ranges. This had its range back in this area. Things where if it's going to consolidate and then break up, you could do credit spreads on this, like bull credit spreads. So a 1-to-1 bull credit spread playing somewhere in this range. So if it shoots up, you're fine. You get the full credit. But if it meanders and doesn't really go anywhere, you're still getting a percentage of that. But I like it. The last few days before this move up, to answer the question, it's not extended. It's more of a corrective move, but there's money coming into it. Pretty cool to see that actually Oracle is up. Barely, but it's up. I mean, these are the things you're looking for. What's outperforming today? Right? Why, when the markets had a down day yesterday and a down day today, or they're meandering, what's holding in there? That's where you find your true strength. ETR, chart-wise, it's absolutely sideways. Yep, I like it. Let's draw some lines here, and let's talk about this. There is a resistance at this 83, and it looks to me, I mean, it's failed so many times. Right, let's see here, here, here. Look at this gap up, trade down. A big bullish move followed by a big bearish move, and it's been happening pretty consistently. I'm not seeing a ton of volume on it. Actually, this got a little bit lower lately, but there is definitely selling when this thing gets a little higher. So sideways, I think, is cool. In the shorter term, it looks like it might be just getting tighter and it might break out eventually, right? So I would wait for something to maybe get back to the median point. If this could get to maybe the 82 level, right, then I would be more comfortable maybe doing an 83, 81 butterfly on this, or a spread, 81, 80, 83, 82, 84, something like that. But what you're also going to find in stocks like this, as this stays sideways, you're going to have a hard time when it comes to costs. A lot of premium. You'll be expecting a pretty decent premium. You probably won't get that much. So I'd do something shorter term. I do like it. It just looks a little tight, but it hasn't yet broken out. So wait for this maybe to roll over a little bit. I know it's strong now, probably because the markets are in a corrective move today. So if this can really confirm that it can't get above, this high from yesterday, what is that? 83.61, 83.50, somewhere around there, and roll back down, could be decent. Another sideways, she's got his PDD. Okay, this has got that good resistance. a decent move to the upside here, and it's been climbing ever since this gap, right? It hit this bottom, it's been climbing. So let's do something that kind of gives things a little bit different perspective. Is if you were to chart this from here, at first glance, when I had it zoomed out, it seems, because it's setting higher highs, and it did break above this. Very good breakout in this level here, but then it retraced low, and it didn't set a new high. It retested a previous, it set up a support level, and then it just tested it again 3 days ago. Now we have a little bit of a dissension, but once again, big shadow. There's something around this, what do you want to call this, 108 level. This stock does not want to be around. Another sideways candidate. I'd do something a little shorter term on it, maybe a week and a half. Stay below that 108, and maybe just above that, what do you want to call this, 102, 102.50. Yeah, I guess the main takeaway for today, as I share the trades with you here, is just, hey, this is a great time to build your watch list. Let's not react to some trades. I've got a few on right now that aren't looking very good, but I know in 3 or 4 days they could actually turn right around. So kind of stick with it. You've got bulls, bears, and sideways for a reason. Try not to follow any sort of emotion, any sort of political prowess, any sort of announcement, any sort of measurement. Patterns are developed based on price actions, and those never lie. So let's just continue to follow that. Thanks again so much for your participation, and see you later. Bye, folks.